what is currency wars really? Everybody trying to have a weaker currency than everyone else. If you think about what that really means, is that all the central banks around the world are basically cutting rates or making things easier. In a way, that's got to be helpful, hasn't it? If the Americans and the British and the Japanese are all printing money and trying to debase their own currencies, and the countries of, let's say, Asia that are trying to peg their currencies to the dollar are also trying to keep their currencies from appreciating relative, and so they're cutting rates, then everybody kind of gets a little boost from easier monetary policy. So there's a lot of sort of nonsense talked about this. I think there's an element to which we don't want people trying to competitively devalue against their neighbours. But if everybody's doing this in a sort of, like-minded spirit, then maybe it isn't so bad.
What does it mean for the investor? How to play it?
Oh, well, it's difficult for the investor, because if everybody is engaged in very similar policies of cutting interest rates or engaging in quantitative easing, then it's quite hard to follow that. So the US is probably where you start with. They're probably the most aggressive in terms of quantitative easing, and the dollar has been a bit weaker as a result of this. If you're really heavily printing money, then your currency is going to weaken, but everybody else is doing it, so the dollar isn't massively weaker against everything else. All the major currencies are somewhat weaker against all of the, if you take the developed G7 old world currencies engaged in QE, all of those currencies will be weakening against the rest of the world. So if you can just buy the rest of the world, if that's possible, then that's how you do it. But it equally means that anything which is related to the fixed income markets, bond markets, interest rates, they're just low and they're staying low, and they're probably not going very much higher anytime soon.
What does it mean for the investor from the perspective of what to look for? Are you going for fundamentals at the moment, or are we at the position where fundamentals can be somehow distorted, or the perception can be distorted by other things?
I think economies are horribly distorted by the sorts of policies that are being undertaken right now. It's very hard to look at fundamentals and say anything other than that, well, they may or may not tell you anything useful about the economy, but you can still rank countries, you can still look at things like labour market indicators and wage growth and say, this country seems to be doing better than some other country. Economic growth is driven by more than just monetary policy, so we have to consider fiscal policy as well, and that's a really big factor either weighing on or giving a boost to economies right now. The United States has been doing better, is doing better, and probably will do better, apart from the fact that they may be about to engage on a rather brief and perhaps misguided policy of very aggressive spending cuts in the public sector, all wrapped up with this fiscal cliff notion that the media has been running on for a while. Public sector sequestration, that's not so easy to say, but that's coming, and we could see the US popping very briefly into recession this year, but I wouldn't expect that to be more than a fairly temporary event.
Does it mean that you would recommend dollar at the moment? Is it, or would it be your darling?
Yes and no. The near term does look challenging for the dollar because they're aggressively printing money, and that's bad for any currency. But that you come back to the question, which of the, let's say we're talking major currencies, which of the major economies are we most likely to see monetary tightening soonest? And that is the United States. We're beginning to talk about exit strategies and things like that. That's not even on the radar for the Eurozone. That's way off the radar for the United Kingdom.